topic we'll be addressing is pathways to inclusive growth in Africa, digital finance, financial literacy, inclusion, and the democratization of wealth. Thank you. Technology is changing the way we live. It's changing the way we do business, the way businesses finance their businesses. Technology is changing the traditional role of banks as the primary agency for financial intermediation and inclusion. Emerging technology is redefining what banking means to consumers and the role of banks in the new economic era. 2017 saw the rise of conversational user interfaces. Artificial intelligence has made it possible for people to hold meaningful and productive conversations with super intelligent bots, either through text or voice recognition, opening up new channels of customer service and engagement. For instance, MasterCard is developing technology that will make it possible to conduct transactions with voice commands. Blockchain technology has proved revolutionary on various fronts. In banking, blockchain technology can be used for money transfers, record keeping, client onboarding, standard settlements, and various back-end functions, KYC, AML. Actually, all of this helps with the reduction of costs, transaction costs. According to analysts at Accenture, blockchain could save the global banking sector as much as $20 billion by 2022. In fact, banks all over the world are investing in smaller startups focused on developing products and services based on blockchain technology. For example, Japan's biggest bank, Mitsubishi UFJ Financial Group, partnered with Akamai, a tech solutions company based in the US this year, to develop a blockchain payments platform which aims to process 1 million transactions per minute. Santander has also developed an international payment app based on blockchain. Goldman Sachs and a few European banks have done the same. You see, blockchain and other emerging technologies are also changing the way we do things in the capital markets. Several bonds have been issued already using blockchain technology. For instance, the World Bank issued a bond of about 100 million Australian dollars, about $73 million thereabout, on blockchain this year alone. We have Al Hilal Bank in Abu Dhabi that issued the world's first Sukuk transaction on blockchain only yesterday. And that is a fully Sharia-compliant transaction executed on blockchain. Sberbank in Russia also closed a commercial bond. In August, Austria became the latest government to successfully use blockchain platforms to issue a government bond. This had been previously done by Australia and Thailand. Blockchain has proved very effective in cutting out the intermediary and connecting issuers with investors, thereby reducing transaction costs. How are exchanges across the world responding to these emerging technologies? The Australia Securities Exchange plans to switch to using blockchain technology to clear and settle equities trades to cut costs effective 2020. The Singapore Stock Exchange is working with the Monetary Authority of Singapore to utilize blockchain for settlements. The governments themselves are not left out. We have the UAE, Brazil, Denmark, Bahrain, India, Japan, UK, and even Rwanda being members of the World Economic Forum Center for the Fourth Industrial Revolution. And Korea itself has set up a presidential committee on the Fourth Industrial Revolution. UAE and China have done similar. In Arizona, a blockchain records bill has been signed into law, and smart contracts are legal there. In Japan, Bitcoin has been recognized as a legal method of payment. Central banks all over the world, from UK to China, exploring how digital currencies can be made through blockchain. Ladies and gentlemen, to address the topic we have before us today, we must consider the effect of emerging technologies on everything, on banking, capital markets, regulation, government, debt management. With global attention turning to new concepts or paradigms like initial coin offerings and focus on our markets on IPOs, are we required to unlearn and relearn the meaning of financial literacy and inclusion in today's markets? Will this new economic era, if unregulated, lead to equitable distribution of wealth? In such a fast-paced, moving technological world we have today, can the regulators keep up? Or do we require AI to regulate AI? Ladies and gentlemen, the panel begins, and welcome again. I will start by asking my fellow panelists to tell us a bit about what they do. We're going to keep today's session very conversational. No, we're not having long discussions, just conversations, and everyone is free to interject where necessary. So we'll start by asking Jide to talk about what the BP is doing to encourage financial literacy, inclusion, and in whatever way technology is infused or has helped in delivering solutions at their level. And the same question will go across to every member of the panel. Thank you. Jide?
Thank you very much, Jibril. Ladies and gentlemen, good afternoon. I work for the Bureau of Public Enterprises, and I'm sure that a few people are familiar with what we do, but in a nutshell, what we do is we privatize state-owned enterprises. And as part of that process, enshrined in that process is the concept of inclusive growth. So we privatize assets through a number of strategies, including through the capital markets. And so as part of that process, it's not simply for the public to invest via the capital markets in these privatized enterprises, but also for the employees of those enterprises also to benefit, because a particular percentage of the equity capital of the companies are carved out for the employees. Also, another example I want to point to is one of the success stories of privatization is Indorama LME Petrochemicals Limited. Now, in addition to carving out an equity percentage for the staff, we also carved out about 7.5% of the equity capital of the company for the 7 host communities in that particular area. And I'm happy to report that since about 2012, through the profitability of the company, about $350 million has been able to go to those communities since 2012. And that's for a population of about 60,000 people in Rivers State.
Thank you, Jide. Patience?
Jibril, thank you very much. Let me start by saying what I think is obvious anyway. Most people know that the Debt Management Office is that institution that borrows on behalf of the government. So in that regard, we're an issuer, and one of our objectives would be to able to issue our securities, in a timely manner and at very minimal cost. So the issues around what technology can do in terms of raising capital are extremely important for us. Okay, but let me then go specifically to some areas that concern us. So we traditionally for a long time were seen as serving only a segment of the market, meaning, the institutional investors and the foreign investors. They are the ones who buy the securities that we issue, because you need to be knowledgeable and familiar with those products to invest in them. So we then tried to introduce a retail product, and we call it the FGN Savings Bond, which most of you are familiar with. The main essence of that product really was to promote financial inclusion primarily, because we are also part of the financial system strategy, and financial inclusion is clearly a major objective of that group. Okay, so it was to attract the small investors, really small investors into the market, but also use it as a means of mobilizing savings into the financial sector. So we kept the amounts very small. With 10,000 naira, you really can buy the savings bond. The tenors are short, 2 to 3 years. So that was meant to attract really the smallest of investors that you can imagine. And we backed that up with a lot of investor sensitizations, roadshows, TV adverts, and all of that. Okay, so what has been our experience? From March last year when it was introduced up till now, which is about 18 months, we've been able to raise about 10.5 billion naira, and then attracted, and I think that is what is very significant here, we've been able to attract about 13,200 of those retail investors to invest in the securities. So if you ask me, was that our objective, was that our expectation? Not at all. We expected to get a lot more, especially with all the money we spent on advertising and trying to create awareness. Okay, so that has told us something. The experience so far has told us something. Yes, you could attract that segment of the market, the retail investors, into the capital market, into the securities market. Some were familiar with equities, but after 2008, a number of them pulled out. So how else can you bring them in and make them feel comfortable that their investment is safe, they can access it also when they want it, all the good things about the FGN securities that you all know about. So we then realized that financial inclusion requires a lot of work, a lot of education. So even though what we issue are sovereign securities, I have people who ask me, is it safe? Will I get my money back? So that means in addition to technology, we have to then go look at financial literacy. How do we expose that segment to participating in the capital market? Because we need to mobilize those funds into the capital market. I had discussions about, and it's when they come into the sovereign security and they're comfortable, then they can begin to look at others. We always see ourselves as, you know, the pioneer or the guinea pig that goes there, and then we leave the market a bit for the others. So we would like to work with the capital market operators to do more in terms of increasing the amount of funds in the capital market.
Thank you, Patience. I mean, when I started my banking career in Nigeria, we had the banks in Nigeria split into two broad groups: the old generation and the new generation. I think that those groupings and classifications have changed. Now we have the existing banks and the next generation banks. And it's good to have Herbert here, whose institution is definitely one of those considered the next generation banks. Please, could you tell us about what Access is doing and how technology is involved in shaping your thought process at Access Bank?
Thank you very much, Jibril. You know, the truth of the matter is that there's a confluence of huge technology changes as well as competition that is creating a new type of banking environment. If you asked me 15 years ago, would you go to the bottom of the pyramid to bank them? My answer would have been no. And the reason that most people would have given is that you really don't know how poor people can be. And the cost of saving them can be so high. But today, with technology, we can reach out to the bottom of the pyramid and ensure greater financial inclusiveness. Very important. Secondly, one of the other things that you will find out is that competition is driving people's conduct. And the traditional means through which people make money is gradually vanishing. And so we need to look for a different way to make money and a different way to bring down costs. And so that is what is creating a new generation of bankers. Third and most importantly is the fact that in Nigeria, just as you see across Africa, you have 65% of our population that is probably 25 years and below. Now, that segment is an important segment because they determine the future of banking. So what are we doing? We're reaching out to several people. We're reaching out to the youth. We're using technology, the mobile phone, which has changed how people think, all right, and how people transact business. We're using all of those mediums basically to reach out to customers. About 15 years ago or 20 years ago, people would have said, in fact, at that time, we're using cards, and I recall how difficult it was to even sell value cards. But today, cards are almost becoming a cake. I mean, now you can make any transfers or payments using your telephone, even in the most remote parts of the country. So all of those things are things we're doing. But in access, for us, the most important thing is about creating that future, all right? And that is the easiest way to predict it. And what we've done is set up our own accelerator program, which is African FinTech Foundry, which does external scans, takes it, comes up with new innovation, which is applicable in our own local market, and you'll be shocked how fast our market is growing, faster than most European markets. And using those means to basically influence consumer behavior, or at the minimum, all right, try and determine those unarticulated needs of the consumer. Those are some of the things which we're doing, and you will see it across the industry as well, because competition is pushing people, technology is pushing people to new ways of behavior.
Thank you, Herbert. Tian, it's really good to have a regulator on the panel. It's good to have you from the Namibian Stock Exchange here. I'm particularly interested in learning your experience at the Namibian Stock Exchange with respect to financial inclusion and how emerging technology or existing technology is being used to widen the net of, for financial inclusiveness.
Sure. Thank you. I think from an exchange perspective, obviously the new technology, with what you've told us about what Australia has done and some of the others, obviously that technology is an enabler. If it can bring down the cost, it can make more product accessible. Same way that mobile money did a couple of years ago, where we saw M-Pesa taking off. The Kenyans are at the point where they're literally buying government bonds on their phones.
That's right.
So the more accessible you make it, the more financial inclusion comes into the picture. But if we're talking about technology specifically and how it plays a role, the World Federation of Exchanges has been looking at blockchain. Certainly in the clearing and settlement side, it's obvious it has great benefits there. But in a wider perspective, if you're looking at stuff like initial coin offerings, these are effectively unregulated products that are being pushed onto an unsuspecting public, leading sometimes to fraud, wallets being hacked and everything else. So the exchange's role, I think, becomes more important in terms of protecting the investing public. Knowing, for them to take notice of not just buying something on a website that tells you you're buying a Bitcoin, while in fact you're probably paying it into someone's account. If exchanges can play a role to protect that investing public, I think that's a massive role to have financial inclusion and to protect people potentially from themselves.
Thank you. Reggie, what's your experience with emerging tech in Africa? So far, has it been?
My experience in emerging tech in Africa, and what was the second half of the question?
I'm sorry? No, that's the question. What's your experience been talking about emerging tech and the adoption of emerging tech across Africa?
Okay, so in order to answer that question, I think I have to frame what the company does, because the first response is confusion. What we do is peer-to-peer capital markets. So to explain that, let's go through what traditional capital markets are in developed nations. You have a central bank, which is a hub. Around that central bank, you have money center banks. In the US, that would be Citibank, JP Morgan, Goldman Sachs, etc. And around money center banks, you have exchanges, then you have national banks, regional banks, retail, mom and pop stores, etc. We do peer-to-peer capital markets, where instead of going from the hub where it has the power and it goes out in concentric circles, we give everybody the ability to be their own institution. So you could do business with her directly without the middleman, and she could do business directly with somebody else. Think of the big circle, the central bank, and the concentric banks going around concentric circles, where the power is here, centralized, and moving itself outward, compared to a bunch of dots all over this room. And each and every dot represents a person or institution, and they can do business with each other directly. That scares the current legacy holders of power significantly, because it's a material change. That change is enabled by technology. So the reason why I'm presuming The reason why a lot of these institutions and large players and small retail players are worried is because it's changed, and the change is represented by technology. But if you take a look at history, technology has never, ever put a company out of business. It's never destroyed the industry. It hasn't happened once. What actually happens is technology enables a new business model, and that new business model compresses the margins of these companies, then they go out of business. Recent examples would be Google and the media companies. Okay, Google's put many media companies out of business. When was the last time someone looked at a piece of paper for the classified ads? Or when was the last time you bought a vinyl record or a cassette tape? The reason why this didn't happen is because technology enabled a new business model. So the same thing's happening in the financial industry. What we're doing is, we're looking to educate, to teach that you shouldn't be afraid of technology and you should embrace the new business model. An example, and I'll give 3 quick use cases. An example of how these business models make a big, big difference is I have a film crew here that worked at The Guardian. One of the cameramen, I'll point him out, right back there, I gave him a piece of digital gold in August, the last time I was here. The Naira to US dollar exchange rate was 330 Naira to 1 US dollar. Okay, the reason why we use digital gold, and we digitize the gold by using the same technology. We take physical gold, and I actually brought up, this is a kilogram of gold right here. Okay, we take physical gold, we use the technology to digitize it, we put it on the blockchain, and then we'll enable people to send the gold back and forth through their cell phones or computers. I gave them a gold at the 330 to $1 exchange rate. I came back 3 months later, the Naira is now 364 to $1. He made over a 10% yield by holding his capital in digital gold versus the Naira. Okay, he did it without using a bank, a savings account, a mutual fund, or exchange. He can take that digital gold, he can send it to anybody in this room. He can sell it, pledge it, use it as collateral for loan, etc. That's very powerful. Second use case, I went into the hotel. I didn't have local Naira on me. I didn't have small US dollar bills. I've decided to tip them all in digital gold. They were very, very excited. Okay, so again, they learned to use the technology. You take your phone, you go to a web page, you follow directions, you push your button to buy. Okay, the staff goes from the executives and the business manager all the way down to the janitors. Okay, this is a significant way of being financially inclusive because the technology has 18 decimals of granularity. To put this in perspective, the US dollar has 2 decimals. You could get $5 or $5.50. With gold, you could go $5 plus 1.1234567 So we could do 1/2 Naira at a time in terms of transfer value. That means everybody can use the exact same system, from the people who live under the highway to the people who own the multi-billion-dollar companies that drive the trucks over the highway. All use the same system. So there's no such thing as retail and institutional, high net worth and low net worth. Everybody uses the same information highway, which is now a value highway.
Thank you, Reggie. You know what? I think it's very clear to me that using emerging tech could be a powerful tool for financial inclusion. And I mean, I see it being done in more advanced markets and in some other emerging markets. I'm interested, I mean, and this is probably for you, Tian, and then I ask other members of the panel. What are the obstacles to adopting such emerging technologies in Africa? I mean, from a stock exchange point of view.
Look, there's inherent risks in any of these new technologies. And I appreciate what Reggie's saying, but technology has destroyed many businesses. If you go look for a Blockbuster video today, you'll struggle. I believe there's one left because it was overtaken by a new technology and it destroyed that company. There's inherent risks, there's fraud risks in many of these things. If you're giving somebody a tip in digital gold, for him to know that it's actually digital gold and not a fraudulent scam is impossible for him to know unless there's some vetting process where that he can go to for a trusted source to know that that is real. And I think we've seen this with the initial coin offerings that I was talking about earlier. So there has to be a normalization process before the real economy can rely on it. So Bitcoin, obviously, I think, is getting to that point where it is becoming normalized and becoming accepted. Some places are accepting it as currencies. But if you use Ethereum or any of the others, you wouldn't necessarily have the same trust. So I think what's going to happen is a lot of the cryptos will normalize, and there will be 1, 2, 3 maybe at the end of the day. Digital gold's a wonderful concept, and I'm sure it'll get there. But somewhere along the line, the world will decide which ones they use. And once we're at that point, it can move to the next level where it becomes a world currency otherwise.
I was just going to add to what you were saying, Tian, and it's very important. It's important also to protect the investor and savers.
Yeah.
We have a product today which allows us, and by the way, I don't agree with you, Jibril, when you talk about Africa being behind.
No.
This is not true. It's far ahead of the United States. I mean, you can make transfers from your telephone to anywhere in the continent, and it will get there in a split second, and it's happening right now. But obviously, the regulatory framework in every market serves to protect investors, savers, fraud, etc. But we're pushing the boundaries, and I think it's happening. It's happening at a pace that is faster than ever before, but we're not celebrating it. There's a lot happening in the continent right now, all right? And I think the more we celebrate it, the more we refine it, and the more we educate people, all right, you'll find greater financial inclusiveness.
Thank you.
If
Sorry, I'm so sorry.
I just want to respond. I'll try and keep it short. So your example, Blockbuster, proves my point perfectly. Blockbuster had access to the internet, and everybody that worked in Blockbuster had access to the internet. So everybody had the same technology. It is not the technology that put Blockbuster out of business. What put Blockbuster out of business was its business model. It used brick and mortar stores, which had a significant expense. It used physical delivery of the media, which is physical expense. That took away from the revenues. They had to compete with Amazon and Netflix that streamed the media using the technology. So they used the technology, they compressed margins, but they had many more viewers at a smaller margin compared to Blockbuster, who had a small amount of viewers at a larger margin. But when you take the expense out of physical cassette tapes, the rent, the employees, Blockbuster couldn't compete. It is always going to be the business model. The challenge to exchanges and the challenges to banks, again, are not going to be it's not going to be the technology, it's going to be the business model. The example I gave, where everybody could do business directly with each other, can be perceived as a threat to banks. But it's also an opportunity if you change your business model. The reason why Blockbuster is gone and Netflix is big, business model.
Same goes for Nokia. They didn't do anything wrong, but they were playing in the wrong playing field. When the iPhone came along, Nokia wasn't in the same game. And this is where the potential lies for business to lead, and regulation will eventually follow. And that's why I'm saying, whether it's Bitcoin or blockchain technology or anything else, what's going to happen is you're going to find the winners in the game that will take over the next part of the world. And in Africa, we have the potential to leapfrog some of the processes and technologies that are currently already being used and go direct to the next winner.
Fantastic.
And I think that's probably where the opportunity for Africa lies, to bring down the cost and to make things more accessible, and for that to lead to real financial inclusion. Because if we can have a greater offering to people on the ground, to the bottom end of the pyramid, as you say, then I think that's where we can make a difference in people's real lives and the real economy.
Patience, we're talking about emerging tech. Let's talk about existing technology. What is the DMO doing, from your point of view, to leverage existing technology to create financial inclusion and greater literacy, at least in Nigeria?
Thank you very much, Jibril. I think to start with, the first thing we did was really at the wholesale level for the federal government of Nigeria bonds, for which we're using a Bloomberg system to run those auctions. But I think that's really just one level. There's still a large number of people out there that we haven't been able to reach. So some of the things we're looking at least one that is, I think, significant, will be to look at some of the technology that has been deployed in Kenya for the retail investors, where they can actually use their telephones. And one or two groups from the DMO have gone there for study tours. to try and understand that system. Because the point Herbert made, no matter how poor, they seem to have phones that can do some basic functions. So that can be one way. If there's something that works easily on that, that is reliable, I think the DMO would be glad to deploy that at that retail end. But having said that, I think some of the things we need to put in place, and these are issues that investors, particularly at that level, we think they know everything. Savings and doing funds transfer are one level, but actually giving you their money for 3 years, 5 years is really a big issue. So that is not a transaction, it is an investment. So I think along with technology, we should be looking at transparency, issues like transparency. We should be looking at issues like confidence, sort of build up the confidence of the people in the capital market. And I think those will be achieved through a lot of sensitization and experience that we acquire over time. So I think those are absolutely very important as deploying technology, especially when we're looking at investments.
Thank you. Jide, you have the penultimate question before we go to the audience. How, similar to patients, what's the BPE doing with existing technology today to create a better awareness of what the BP is doing to the Nigerian public?
Thanks, Jerome. I mean, first of all, one of our functions, government is not in the business or should not be in the business of business. What we should be doing is creating an enabling environment in order for business to thrive. So if you look at one of the lesser known aspects of what the Bureau does is reform. So, I mean, we've talked a lot about telecoms, and it was the reforms, the telecoms reforms carried out by the Bureau, which have culminated in the telecom sector that we have today, and not your typical telecom sector, but you have telcos now branching out to provide other services by partnering or collaborating with other industries. Having said that, technology still plays a major part in what we do in terms of access to services and encouraging inclusive growth. So I think one of the problems that we have in Nigeria is power, and I think most people can empathize with that. And one of the major challenges in the power sector is the liquidity issue. So right now, the Bureau is working with consultants to develop technology which can actually track power generated and then also revenue within the value chain. And this is operating through devices embedded in meters in the network, which generates data to a data processing center, which enables us to be able to track revenues within the value chain, and in order to ensure revenue assurance for the power sector.
I think the final round of questions before we go to the audience, for me, would be to find out what each of your respective firms is doing with respect to getting deeper retail participation. I know we've touched on it already, so we'll just keep it very light. And financial literacy. I mean, we had a conversation about this earlier. I think the concept or the paradigm of financial literacy is an evolving one. It's not the same today as it was this time 2 years ago. But for financial literacy, what are each of your respective firms doing or businesses doing to ensure that more people become financially aware? I'll start with you, Herbert, and we'll just have 1 minute each.
Thank you, Jibril. I mean, I think as a starting point, the entire banking sector is involved or invested heavily as far as financial literacy is concerned. We give our time year in, year out to spread and teach not just people in schools, but also share information about finance, about investing, about savings, and all of that. But if you talk about access specifically, one of the things which we've done is basically ensure that ability to reach out to the bottom of the pyramid happens seamlessly. All right, so using USSD platform, people who have phones that are basically feature phones can basically transfer monies, can open accounts, can do whatever they want to do. Through our early savers products, we've been able to reach out to several hundreds of thousands of children and having taught them how and the values of saving they are saving. Using our W initiative, which is basically focused on women as well, and we've created distinct products to support them in savings, in lending them, in connecting them, in empowering them, etc., etc. So all of those things are things which we're doing. But again, if you look at the entire industry and the new SANEF program, one of the things that the banking sector has done under the auspices of the central bank is basically to devote large sums of money out of the profits every year and help to support people buy telephones, feature phones to enable them conclude financial services across the entire country. And the whole idea is that over the next 3 years, we should be able to get about 50 million new people into the financial services sector who would actually have bank accounts and be able to consummate transactions.
Thank you. Tian?
Thanks. I think a lot's been discussed about the population growth and the benefit that Africa should have within the next 10 years with a growing young population. But the bottom line is we need real economic growth if we want those people to be economically productive and to actually have jobs and be able to sustain themselves. Otherwise, it won't be a population benefit, it'll be a risk. So from an exchange perspective, what we've been trying to do is use our national capital better and bring products to market that can actually bring foreign capital in. So we've had 2 capital pool companies recently listed in Namibia, which is essentially a cash shell that gets listed to raise the capital to then be utilized locally. And I think this is probably a form of a product that not only creates an investable product, but creates an avenue for your national capital to be allocated locally instead of being invested in a foreign market. And I think we need more of those types of innovative solutions to bring solutions to our own countries and our own projects. But you could raise that for infrastructure projects, etc., etc. And instead of running around to foreign markets to find funding, we should be able to raise that ourselves.
Thank you. Reggie?
Okay. From our perspective, this is a time when you do have to differentiate between retail and institutional. So I'm going to give a bifurcated answer. So on the larger side, the institutional, we're looking to partner with exchanges, family offices, pools of capital, to entice outside capital to come in. Family offices in Americas, Europe, Asia, hedge funds, and to put money in a project such as an infrastructure project. Infrastructure project that would be funded by a high-style ICO that would basically create a tokenized bond program to finance a lightweight monorail that connects Abuja and Lagos. One of the biggest issues I've seen coming here from the outside is infrastructure. There's a lot of traffic, not because there's really that many people, but the roads are not in good condition. When you do an infrastructure project, you're stuck with it for a while, so instead of expanding the roads, you could create a public transportation system such as a monorail. That monorail would be funded through token offering, and that monorail would be able to monetize many parts of Nigeria and Lagos and Abuja that are currently not contemplated. For instance, the monorail can charge a fare. The monorail will increase the value of real estate everywhere between Lagos and Abuja, and you would have a different risk-reward compensation system for the institutions. They could get an interest rate, say 7% nominal. They get revenue sharing, and they get the opportunity to participate in an increase in the real estate value. This attracts a new set of capital and a very interesting set of capital from all over the world directly to Nigeria. FDI, foreign direct investment. On the other side, we have the retail, we have the unbanked, underbanked, etc. Using an example like the digital gold that we explained. And I would love to address the shortcomings, but we don't have time here. But from the education perspective, I think that everybody on the retail side, regardless of your net worth, needs to look at the economic situation from a macro perspective, a global macro perspective. A lot of people feel that they're insulated from the gyrations of the Naira, but you're not. those who can afford to do business outside Nigeria feel the US dollar strengthen the naira. But those who only do business within Nigeria also feel it. For instance, the price of sugar goes up significantly. Okay, the price of a lot of commodities and goods go up significantly because they're priced in reserve currency, the US dollar. Okay, but a lot of the people who buy retail don't necessarily think with that terms. They just feel like they're getting poorer. So understanding that global perspective, right, goes a long way, and it helps them choose their investments. And when you go to the investments, they usually get these investments from products that go through the exchanges, such as the Nigerian Stock Exchange, and the Brazilian Stock Exchange, etc.
Thank you, Reggie. I think we have a quick 1 minute or two for Patience and Jide to tell us about financial literacy and education and what their respective organizations are doing, and we'll open it up to the audience. Thank you.
Thank you very much. I think we have kept it so far very simple. We have, so just as we do investor meetings offshore when we're issuing local securities, here within the markets we've actually had meetings. So we go to speak when professional bodies have their meetings, whether they're annual meetings, we go there actually to speak with them. And then we've done the markets as well. And then third level, we've done the media to educate them about the financial markets and the financial products. So that is first level. We'd like to do a lot more. And if there are institutions here who would like to collaborate with us, we're happy to do that. Thank you.
Jide?
Okay, there are a number of things that we're doing. So first of all, we're having sensitization forums in the 6 geopolitical zones, essentially just trying to articulate the opportunities and the opportunities that would arise from the government's privatization and reform program. So that's one thing, just educating the public on that. But then also, and again, there are a couple of other initiatives that we're working on. One is that we're working with the National Sovereign Investment Authority on the reform and the strategic investment in Nigeria Commodity Exchange. The idea behind that is to create greater access to markets and then also education for farmers. And then also going back to the power sector, and this is something that all Nigerians can empathize with. In conjunction with the Shell Foundation, Kanu Disco and Kaduna Disco are working on a pilot scheme whereby we would provide uninterrupted power. So it's about providing access to power in rural communities. So at the moment, the pilot scheme is looking at taking a particular village and providing uninterrupted power to that village and enabling and 100% access of power for everybody in that village to power, and they're able to use whatever it is that they're able to pay for. So those are the initiatives that we're working on at the moment.
I'll just, Jibril, if I may. I just thought I should mention one additional point. I was having a discussion with a couple of people last week, and it became an argument, and the whole thrust was that Nigeria and South Africa probably are the same from a GDP standpoint. But how come the South African Stock Exchange is in multiple times that of the Nigerian Stock Exchange, and its capacity, obviously, to rally resources around an investment? And it became clear to me that, I mean, of course, amongst other things, the level of sophistication of the market, the level of and depth of financial literacy are all critical points. The levels of financial inclusion and ability to mobilize savings are important. So I think for Nigeria, there are two things. First of all, we made a big leap several years ago when we increased the capital of banks and created greater capacity to support investments and to support infrastructure. But I think we need to take it to the very next level, which is to make sure there's greater financial inclusiveness, greater transparency in the markets, and of course, greater capacity to mobilize savings if we need to get the growth that we need to have over the next couple of years.
Thank you. I'd like to say thank you to all the panelists. I know we're going to take a few questions. But before we do so, I think for me the key takeaway here is simple. To drive financial inclusiveness, to drive financial literacy, the democratization of wealth, emerging technologies could be leveraged. They have their issues, they have their challenges, but we cannot bury our heads in the sand. We need to embrace these new technologies, or at least understand them. Whilst that is going on, there are existing technologies which we can leverage to penetrate into different markets, to encourage financial literacy and inclusiveness already. So a lot to take away, a lot to think about as we enter this new era of digital finance. And I want to say thank you to the panelists and thank you to you all for being an attentive audience. Questions?
All right, so we're ready to take questions if we have questions. From this other end, I think we took some questions from this line, and so let's take from this line of thoughts now. Yes, here.
My name is Yemi Akisonya from Options Clearing Corporation. That's the world's largest derivatives clearing organization in the world. Thank you very much for a great conversation. I thought this was fantastic. I wanted to make a question and also present an opportunity around the blockchain technology conversation. So as of recently, I want to say as recent as summer 2018, the SEC in the United States had rejected for the second time a Bitcoin ETF proposal. Some of the reasons were around investment protection, manipulation of concern in terms of lack of regulatory oversight. Mr. Herbert, you mentioned earlier that Africa was ahead of the world in terms of technology, and I think when you think about mobile banking, I think Africa definitely is a leader around the world in terms of that. We're seeing the US and the UK starting to catch up with, you know, Zelle and mobile payments, something Africa has done many years ago. With that being said, I think that there's an opportunity with blockchain and an opportunity with you know, cryptocurrencies where Africa can once again ascend and be the champion on the rise to take the lead on that technology and take the lead on cryptocurrencies. And I don't believe that we're doing enough to challenge the different things that the SEC has drawn out in their report as to why they're against, not necessarily against, but they're skeptical about blockchain and Bitcoin. So my question to you was what are your firms doing in terms of getting in front of the challenges around Bitcoin and blockchain? That's number one. And number two, what are your firms doing not to get blockbustered in terms of your example, in terms of Blockbuster? Thank you.
Group Managing Director of Access Bank mentioned reaching into the bottom of the pyramid. The Director General of the Debt Management Office mentioned buying bonds with phones in Eastern Africa. I wanted to get the panel's thoughts on the media reports of MTN applying for a mobile money license. MTN has about 55 million subscribers. BVN connectivity, that's bank verification number connectivity in Nigeria, September of last year was about 30 million. So just MTN alone has more subscribers than there are BVN connected accounts in the country. So looking at the telcos and where the telcos can play a role in financial inclusion, I'd like to get your thoughts on them applying for the mobile money license and what that would mean.
What's really the difference between money, crypto, and airtime? Fundamentally, these historical lines between them is going to get blurred, and it's probably going to turn into a single tokenized entity or asset. And MTN's move towards banking is actually quite to be expected, and you've also seen banks move towards telcos. So I think these technology disruptions will change the historical lines of what certain industries and certain businesses do.
I'd like to amplify that. Most people's perception of a bank is historical. They think of a bank as a big building with marble walls. In 2019, a bank is a data company. It stores data. This bar of gold used to be what backed the US dollar. Okay, in 1973, Bretton Woods, during the Nixon administration, they came off the gold standard, and the U.S. dollar is now a fiat currency, basically belief in the U.S.'s ability to back the dollar. From that point, almost 93 to 97% of all the money is digital. Right now, if I ask everybody to raise their hand, is the majority of your wealth, monetary wealth, is it digital, or do you have actual naira or shillings in your pocket? So raise your hand if most of your wealth is in your pocket. Now, either everybody's ignoring me or most of your money is already digital. If most of your money is already digital, then the entire banking system is data and moving data, ones and zeros from left to right. Same thing with exchanges, same thing with insurance companies. That's what value is today. So MTN applying for a banking license is simply the changing of the business model and a challenge to this man's current industry or emerging in the industry. When you look at it from that perspective, you see the next generation of financial services from a totally different perspective.
I think we need to make sure it's not as simplistic as it appears. There is a definition for what banking is, which is about mobilizing surplus deposits or from surplus units and taking it to deficit units. Now, there is nothing wrong with being on either side of the divide. The most important thing is that there is need for regulation to protect people's savings. Now, if you want to basically start performing that role of banks, it's okay, it's fine. But you must be ready for the regulation that comes with it and all of that, because protection of depositors' funds is extremely important. Now, the payment service platform that MTN has applied for is a good thing, obviously, but it will be regulated. I think there's a role for everybody. I think the mobile telephone companies have the infrastructure to provide, and they can bring down that cost, which would help financial inclusion. And banks also have a role to perform because they come more from a compliance standpoint and must be regulated. I think in between these two, we will find the appropriate balance that is appropriate, that is right for Nigeria. Now, I've had questions about Kenya, which comes from the model where that was telecoms led, and that was because the Kenyan banks were not as big as Nigerian banks. All right, in Nigeria, it's coming from the other side because you have Nigerian banks that are very strong. You have a large switch network, etc., etc., etc. So it's a different thing. But I think what the regulators are trying to do, and I'm talking between the NCC and the central bank, is to find what is the appropriate Nigerian model that can lead to greater and fast financial inclusion. That would be my take on it. But just before Ali Baba calls us to an end, I think the issues around cryptocurrencies, blockchain, and all of that. From a blockchain standpoint, I think we will continue to push the markets, all right, because it all revolves around big data and interpretation of data, etc. But cryptocurrency, the regulators have a very clear view on it, all right? It will be resolved over time. But I think it is sacrosanct that they need to protect the market, they need to protect investors. There are issues around fraud, the same issues that came up when internet banking first came out. So, and I think that will take a bit of time for it to evolve.
I think Patience, there was a question that touched on the DMO. Do you want to address that?
Okay. Thank you very much. I think my response is fairly simple, and the question was the DMO is considering deploying the model in Kenya, not exactly that, which basically works with telephones. I think what I'll say really, there is, we're aware that the central bank and NCC were working together to release a circular. I think the central bank, rightly so, was more like the senior partner there because the banks obviously had moved far on technology and the payment system. So as a user, so the DMO for this purpose will be a user. We would select a user or select users based on the ones that offer us some minimum, options. It has to be simple to use. It has to be, there has to be transparency. There has to be safety. It has to work for us within the regulations that have been set up for the operation of those systems. Thank you.
Okay. Lastly, I was just going back to that question that was asked. I mean, I think we, about MTN applying for that kind of a license. I think really we have to understand that we have to understand that it's a good thing, and I think that with innovation, it will encourage inclusion. So these services are essentially the same. We still require banking services. It's just that that service is being provided in a more convenient way, in a more inclusive way, and hopefully in a cheaper way, which goes back to inclusive growth. So I think it's something that should be encouraged, but obviously the service providers need to be protected, and regulation is key.
Thank you. And I think it's good to end on this note. I had the same conversation about regulation with someone, and he reminded me that before regulation comes policy. So if there's no policy, what are you regulating? I think countries like the UAE, Korea, and I believe China have set up national committees to look into policies around matters like this. I think maybe many African countries should do the same. But I would like to say thank you to everyone on the panel for such an engaging conversation. I want to say thank you to the audience again for being attentive, and the future begins now. Thank you.
Want to address the other part?